I'm Catherine Ross, and I'm here live from the NYC with Jim Cramer. Jim, let's kick it off by going unfiltered. What's on the top of your mind?
The Doves are in charge. The part of the administration that favors a deal no matter what, whether it's small or big, to me seems to be calling the shots. The president has them where they want them, whether it be because he's already taken tariffs very high, and now all he's doing is saying, listen, I will stop raising them for now if you do something good. If you don't, they're going to go up. That's the president having a lot of leverage. One of the things people should be focused on is Costco, C-O-S-C-O. When the president put new regulations on them, that's the largest shipping company the Chinese have, unnoticed. It's something that they need taken off. Huawei needs those 5G parts. There are so many asks that the Chinese have. And then on top of that is the incredible loss of face from Hong Kong. The Western media, I think, has traditionally regarded a tremendous moral equivalence between President Xi and President Trump. Western media tends to dislike Trump and not really understand Xi. And the Western media is, I think, troubled by the lack of freedom of speech of even just a general manager from the Houston Rockets. So the mainstream media is waking up to the notion of who the Communist Chinese are, which is something that the Communist Chinese was hoping wouldn't happen. And that's top of mind for me. And that's why you can have such a rally here. You can have a UNH, which is downgraded yesterday by Jeffries, and 218 goes down to 214 and then goes to 228. There were a lot of desperation sells the other day. Just at the time when we saw, I think, the sunset on the Navarro camp, which is for a comprehensive deal, and the sunrise for the Mnuchin camp, which is for a deal.
Well,
it's very important, very different.
Speaking in that vein, I mean, we're up 383 at 10:05 a.m. on the Dow, but we've got a meeting with President Trump and Vice Premier Liu He later this afternoon. What if that's canceled? What if something goes wrong?
Well, I think, again, if you have Mnuchin in there, it's not going to go wrong. You know, we own Caterpillar for Action Alerts. The stock was at 117 the other day, and now it's up 11 straight points. And that's entirely because people see Mnuchin in the meetings, but not Navarro. Now, someone could say, well, Navarro is supposed to be not there anyway. I disagree. I think that Navarro has been very principled about the 7 deadly sins. I've written about it in Real Money, that what the Chinese need to change. Mnuchin has historically said, listen, we can get a deal, and it's going to help people. When you see Mnuchin in there, the desire for the Chinese to not have this next round of tariffs is pretty palpable because of again, no one in the Western media understands this, but the growth in China it's basically stopped. It stopped. You can measure that, by the way, looking at copper and Baltic freight, not really doing much. And what you can measure it by this Costco, which is just devastating for the Chinese. So I think that people have to understand that the president, hate him or like him, has them where he wants them. And the Communist Chinese are baffled. I think they're baffled because in the end, all the presidents have always sold out the American people, working person, for the elites. In the end, it was always about doing more business. Our company's doing more business in China. That's no longer the case. The president is not backing the elites. And by the way, who is another person who would not back the elites? Senator Warren. And when you read her policy on China, you realize that she does not favor talks. She favors climate change. And she would not be inviting Xi to play golf. So I think that the Chinese, again, are baffled. They're like, wow, we really kind of overplayed our hand. We thought it was going to be Biden. We thought if there's going to be impeachment, that therefore you're going to get Senator Warren, and Senator Warren can be dealt with. These two politicians are very populist, which means they hate the elites. And the elites are the people who wanted to do more business in China. So be aware that those are the people who are being sold out. And that's very different for America. And you can take stocks up all you want. At a certain point, you're going to regret it. Not yet, because so many people are short. But the incrementality of whatever deal we reach is not going to make it so that things are safe if the Chinese backslide and agree on something and then don't do anything. And that's been their pattern. And the Western media has given President Xi a pass that's incredible. We own CAT. It's up 5. My inclination, we have a conference call next week. If if this trajectory continues, my inclination is to sell, because the amount of business, the downturn in business in China is pretty radical. No one's ever seen anything like this.
I want to circle back to something that you said, which is that Trump can walk away a winner, which is the point of your Real Money column this morning.
Yes.
And Trump can walk away a winner, especially if he doesn't put any new tariffs on the table. But is that enough result for the markets?
Yeah, I think it is for now, just because that means you don't have to take numbers down. I think people feel like you have to take numbers down on the next tariff, because a lot of the retailers have said that, and because people keep thinking there's going to be a tipping point where inflation picks up, or a tipping point where employment goes down. We had really great jobless claims yesterday. Thank you, Matt Horgan, for pointing this out to me, my writing partner. You can monitor certain stocks. I mean, Nike, Apple, these are incredible. These are stocks that of companies that are supposed to be at the precipice with China. Apple takes out and creates goes through the double top. I think a lot of the chartists are they're baffled that could happen. So we have a combination of short squeeze and Chinese being just feeling I have a no-win situation. Like the best thing they can hope for is that the tariffs don't go up. I mean, that's really not that much of a break for them. There's still tremendous flight. I mean, I know I had Mickey Drexler on last night. Alex Mill, new company. What are they talking? Sourcing away from China. Sourcing away from China is a PE enhancer. Sourcing with China is PE decliner. Again, that's different from the elites. The elites have always said, if we can do more business with China, then people will like our stock. Now it's the opposite. And I think that you better heed that. And if the Chinese backslide on whatever they agree with, oh my. So read my Real Money column, and you'll see why I say that hate them or like them, the president has them where he wants them.
Head on over to realmoney.com for that. And you can also read about our Real Money stock of the day, SAP. Now, SAP's in the news because CEO Bill McDermott is stepping down.
But they guided up, and that's important for tech, because SAP is moving from on-prem to cloud. It's the first sign that cloud stocks may be okay here. CrowdStrike, cloud security, was downgraded by Heather Bellini, who's a great analyst at Goldman, and I thought that would make it so that the cloud stocks are going down, but SAP's comments are driving the stocks up. So you have a combination of the United Technologies going higher. That's big China stock. 3M, big China stock, because people believe it to be some sort of deal. And you have the cloud stocks going up, which have been real dogs, Salesforce, because of SAP. So you've got a number of trends. You've got, I was talking to Kayla Tausch earlier today, a person in Washington who's so terrific, and she was saying that the word is that the Chinese might let companies in without having joint ventures. Well, that would be great for American Express. So just keep in mind there's a lot of short-term positives about to head into earnings. We own Goldman. Goldman's now $7 above when I say we, it's Chapel Trust, $7 above book value. They have a wonderful story to tell about the Apple credit card. And yet when a stock runs hard into earnings, it tends to sell off if it's a bank. Be careful.
So I want to take a step back from this news of the CEO stepping down, because I do want to ask, he said in a quote, he said that he had asked a bunch of other executives if 10 years was long enough, and they said yes. And when you see, as an investor, when you see a CEO step down after a very successful tenure, what is going to replace your confidence in that company?
Well, I mean, I think that Bill has groomed people. I don't think that, I mean, he has that tandem CEO again. Bill always knew, I think, that he would. My friend Jeff Sonnenfeld has always talked about succession and how to do it. I think Bill knew how to do it. He's a great man, a great guy, and I think it'll be very smooth. And the stock is saying that. It's a great company. I happen to like Accenture more, and I like Salesforce more. SAP's got HANA; it's a good system. But I do think that Salesforce is the one that has the growth. I can show you charts on the enterprise software, SAP and Oracle versus Salesforce. We're going to be going to Dreamforce in November. We've got to figure out how to do bull market fantasy when I'm there. And that cohort is doing quite well because of SAP today, which is really amazing. There's a couple of things that, there's some upgrades that are really moving stocks. The remarkable piece we can talk about during our Action Alert video, J&J, and the Bernstein piece is really important. So
you read my mind already.
Well, there's a lot of things that are happening that are positive, that people didn't think could happen. And what the big change was that the president went with Mnuchin over Navarro. And that's how I look at it. Some people might say that Navarro was never in play. That's quite wrong. The president seems to want to do a deal, not in the worst way, that's Mnuchin, but in a way that says, hey, listen, I won in return for doing absolutely nothing, right? Keeping the tariffs high at where they are. In return for absolutely nothing, what I got was this. That turned out to be an unbelievable position to be in, but the mainstream media does hate Trump so much that they're blinded. Now, I don't hate or like Trump. What I do is like stocks going higher. That's been my true north. I'm sorry, that's what I do to try to help people make money. I'm not neutral. And this is good. It's good. And there are those who think that everything's phony. And I always reiterate that since 1979, I've always heard that everything's phony. 1982, started money professionally. Everything was phony. And in every one of these cases, I was bullish. And every one of these cases, people felt that I had no rigor because I was bullish. And I look at this tape, and I don't want to be bullish. I just don't. Because I don't trust the Chinese. But I recognize the short positions were very, very high. Very high. Surprisingly high. And that's what's in play right now.
All right, Jim, thanks for joining us. All right, guys, if you're on Facebook or on TheStreet.com, we are now heading over to our Action Alerts Plus Daily Rundown show over on ActionAlertsPlus.com. I'm Catherine Ross, and we'll see you on Monday.